What's going on, guys, and welcome back to the Nate Show. I know today was a red day, I'm sure, for all of you. I'm sure day traders, you guys are not happy about today. That's completely understandable. But yeah, the stock market very bearish today. It was also very bearish yesterday. Monday it was going down. Today, all market averages down again. Now, the big question is, will the stock market crash this year? Now, obviously, no one can predict what's going to happen, but the chances of it crashing this year are very high because, the Federal Reserve has been lowering rates for a very long time, and now they have nowhere to go. If they are to raise them, the market's going to crash. But if they can't lower them anymore, if they made the interest rates actually negative for the first time in history, uh, it would become so inflated that it would probably just crash because so many people are trying to pull their money out because they realize that's the most it can get inflated. Now you're probably thinking, well, it's only been a year since the last stock market crash. The stock market crashed last year in February and March because of COVID, the pandemic. And before that, it was in 2008. And it's all kind of spaced out between like 10 and 15 years. But the thing is, it should be taking 10 to 15 years for the stocks to really get inflated. It goes up by a certain amount over 10 to 15 years, but in the last year, it's actually gone up so much that it's like it's been 10 to 15 years. So instead of it crashing in the next 10 to 15 years, it will crash. It will probably crash this year. Now you can't control if the stock market crashes or not, but you can be a little bit safer when you trade. So one thing you can do is not keep super long positions. Now some of you do long-term investing, and that's fine, but you may not want to keep stocks for like months. I mean, if you're planning to keep it for years, then that's okay. But if you're doing months, I recommend not doing that. I recommend just day trading or swing trading because you don't want to have super big positions. Because if the market crashes and you still have those positions that you're waiting for them to go up in a few months, that's not going to be good. So you're going to want to keep short positions. I also don't recommend panic selling. If the market crashes and it keeps going down, don't sell the stock because it probably will go back up to that price that you paid or even more, and you can make profit off it. You would not want to um, sell as the market's going down. That's panic selling is horrible. It's there's nothing really great about it. It's not protecting you at all, and I wouldn't recommend using stop losses either. I would just see how it goes because it could crash tomorrow. It could crash a week from tomorrow. You never know when the market's actually going to crash, so you can't always have stop losses ready. So uh, just keep short positions and don't have super long positions unless you're planning to keep, unless it's a growth stock that you think will be like the next Amazon, for example. That's different. That's a different story. But if you think a stock is undervalued, then and you're planning to keep it for a few months, I would keep super short positions. So thank you for watching the video, and I hope you take my steps to be more careful if the stock market crashes this year.